Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 100. As always, joined by the three amigos. We got Keith Dicker, IceCap Asset Management, and Rich Diaz, the Tom Brady of Macro. Welcome back to the show, gentlemen. Boomer, we made it.
We made it. You made it. So here we go, guys. Episode 100. I have a gift for you.
Go on.
It's going to be a boomer story. Are you ready for it?
We're ready.
Okay, let's go. So in our family lately, whenever anyone uses the word rap for something, I'll break into a rap. And Junior loves it. My daughter has the biggest eye roll ever. And Mrs. Icecap loves me even more because it's a lot of fun, right? It's cool. Because not every, dad can do that. So anyway, I'm at Starbucks earlier today getting a lemon loaf. And anyway, I'm there, and the lady in front of me, she orders a wrap. She said, "I'll have a wrap, please." And I look at her and I said, "Did you say wrap?" So then I said, "I woke up, I got out of bed, I dragged a comb across my head, I went downstairs and drank a cup." And that's a wrap.
No.
Oh my God, that was the worst.
You did that at a public Starbucks?
That's it, guys. That's how you keep things going in life. You have to be
Keith, you look pretty good though for a guy that pile drives a lemon loaf every day.
Yeah, I know. Thanks. It's in my genes. Rich, what's up? 100 for you?
Jesus, I have absolutely nowhere near the story that you just eviscerated our ears with. Not a great week, man. It was Labor Day. I went to a wedding. Shout out to Evan, somebody who we shouted out on the show. I was actually.
Did you flirt? Did you flirt with the bride?
I flirted with the bride. I flirted with the groom. I danced for hours and hours. It was great. At like 2:00 in the morning, I was standing outside waiting for my Uber, and I was spotted by somebody who actually listens to the Loonie Hour. So I figured I'd give him a shout, Esteban, which was pretty cool. And he took a selfie. I'm always quite honored to that. And that was nice. And then on Monday, I spent the day working with Pascal and Kevin, who are two fellas from up north, and they beat the crap out of me. They cut down like, I think 10 or 15 trees on my land. And my goodness, is that hard work. I could barely keep up by the end. And
you get a permit for those tree cuts?
No, I did not don't tell anybody. I did not get a permit for those. No, most of them were dead, to be fair. Most of them were dead. Some of them were dangerous. Apparently, I had been camping underneath a tree that was totally rotten. So that was a bit sketch, but it was a great weekend, man. And now it's the 100th episode. Wow, we haven't missed 1 week, which is incredible. So yeah, shout out to Esteban and Kevin and Pascal and Evan, all these people who listened to us. And yeah, let's kick it off. Let's go. Lots of good stuff.
100 episodes. We were supposed to have a special guest, but I think he got nervous. I think once we told him it was the 100th episode, I got a sense of panic. And so we're going to do it live. So, we had the BOC announcement this week. I think, was it 2 days yesterday? As expected, Keith, myself, no rate hike. Rich, you're wrong. So I believe you've got a Twinkie for us here.
I do have a Twinkie for us. I will eat it. I was wrong. Go ahead. I have lots of comments though.
Yeah, it was kind of a boring presser. Well, there was no presser. So Tiff Macklem is actually doing a speech today in Calgary. It's Thursday, the day that we're recording. So he's in there in Calgary. Good thing is about Calgary, nobody recognizes him there, so he should be safe. But
and the presser's at the lawn bowling club, correct?
Yeah, it's at the lawn bowling club. He's a couple of weeks late, but there
might be some leftover booze there if he searches the cupboards.
Yeah, that's right. But we had the three premiers, of course. I think he was really feeling the heat. Remember we talked about it last week. You had David Eby of BC penning a note to not raise rates. And then I think a day later, you had Doug Ford over in Ontario, and whoever the guy is in Newfoundland, Keith.
David Fury. David Fury. Yeah.
There's
Those
three.
people should be embarrassed, by the way, for making that public, but carry on.
Well, I mean, it certainly
but
does.
it's political deflection. I mean, that's what you do. You deflect and pivot and move away and, Muhammad Ali, and then you get a chance to do something about it.
But those
if I'm a premier, I'm going to blame someone, but never myself.
That's true.
How's that?
I'm starting to like
Look at Rich chowing down on the Twinkie. That's pretty good. It looks like a good one.
Two of the premiers, though, that are like, I would argue, the most susceptible to interest rates, right? Like, BC, Ontario, two markets that are heavily dependent on interest rate sensitive housing, and all the spinoff that comes from that. So certainly they're feeling the pinch.
Yeah, it doesn't matter though. They shouldn't have said anything.
Do
you remember just a couple of months ago, everybody was giving Pierre Poilievre shit because he said Tiff Macklin something, you know what I mean? And
said he should be fired.
He was rightly derided. I remember that this is an independent technocrat, and everybody knows how we feel about the guy, so we don't have to belabor that point. But I think it's embarrassing. It's a banana republic stuff for premiers and politicians to come out and say that they should do this or that or anyone. I think Christina Freeland also made some comments about it, but that's not what we're here to talk about.
Well, we can kind of comment on her.
What were her comments? Like which side of the fence was she on?
I mean, it was a very slow, like, again, there was no presser, right? So there wasn't a whole lot of things to parse. We just had some commentary from the federal government. So Christopher Freeland, after the hold, came out and said that it was, a nice welcome relief for Canadians, and quote, "My number one priority is to use all the tools at my disposal and to work with partners at other levels of government across Canada to ensure that interest rates can come down as soon as possible."
My God, who writes that stuff?
So
in the Bank of Canada's defense, I think we've talked about this before. In a normal functioning cycle, they would have crushed. The economy would have collapsed already. That's what would have happened. However, you have all the deficit spending by not only Ottawa, but by the provinces as well. I mean, that's happening. And then on top of that, you have the population growth that's coming in, which seemingly no one can count. But Rich did spy it when he was out there, for sure. But like that, but those two moves are completely overwhelming everything the Bank of Canada is doing. And then for the provinces as well as Ottawa to come out and critique the Bank of Canada for raising rates to try to offset all the bad doings they've done. It's a little, what would you call it, Rich?
I call it rich. It's a bit rich. Well, can I jump in there, Keith? Because I thought the population thing was really interesting, right? So I've had to eat a Twinkie, and now I think I have, diabetes or something. But I think what was interesting, so I know there wasn't a presser, so I went and did a little digging. And I thought, well, what stood out to me, a couple of things, if you don't mind, boys, is one, that they didn't mention population growth in the comments. So this is the first time in 3 months. So in March 2023, there was no mention of population growth. In April, they said strong population gains are adding to the labor supply, supporting employment growth, and boosting aggregate consumption. We've talked about that. In June, they said consumption growth is surprisingly strong, broad-based, even after accounting for the boost from population gains. In July, strong population growth from immigration is adding to demand and supply. And lo and behold, when people start hand-wringing and complaining and the CBC starts bitching about population growth, well after the fact, remember, I think the CBC is a contrarian indicator, so we'll see what happens to population growth going forward. But lo and behold, in September, not one mention of population growth, which I thought was really interesting. And I don't know, I just thought that was really fun. And yeah, so there you go, Keith. I think it's over now. Population growth is no longer a thing, apparently.
It sounds like Rich needs my tinfoil hat today.
No, come on.
It sounds like you're implying something.
No,
however, I think your apps. I didn't realize this because I didn't read through the minutes or whatever they had. I'll admit it. I was busy doing something else, but that was left out on purpose. It wasn't, oh man, we forgot to mention it this time. They've clearly heard it from a number of different people who pay their checks to say, hey, you got to cut that out. And that's the way the world works, guys. It's not a nice, easy, smooth. Let's always do the best for everything.
Sorry to interrupt the show. Just want to let you know this episode is sponsored by Addy. Addy is an online investment platform that enables everyone to invest in institutional-grade commercial real estate. They're the largest real estate crowdfunding platform in Canada. You can invest as little as $1 to start. I've personally invested in several properties on the platform, and they'll be launching a new property shortly. The next one is 20 townhouses in Calgary that are fully rented out or ready to go. Addy is free for investors to invest, but they also have the addyONE membership that gives a handful of benefits, including advanced access to properties, exclusive events, and more. Loonie Hour listeners can use the promo code Loonie Hour for their first year free on the addyONE membership.
We've talked about the StatsCan, random number generator, which is basically the employment figures and how volatile they are in Canada. There's a good article here that was published a few days ago, highlighting the discrepancy, right? If we're missing about 1 million temporary residents from official figures. What does that do to the labor market numbers, and how many of these, how many temporary foreign workers are we undercounting in Canada, for example, and what does that do to the data? And so there's a lot of clout right now, I think, about the economy. You can imagine, again, if you're Tiff Macklem trying to navigate this. You don't even have really, how accurate is your data?
Geez, are we I can't believe it. On the 100th episode that we're pouring our hearts out for Tiff Macklem. I'm very surprised that that's where we ended up. But
we've really come full circle.
Yeah, we've really come full circle. Can I add a couple more things that I noticed on the presser? Because I instead of doing my job, I was actually just reading this apparently. Which is something else we talked about and I thought was important, which was inflation expectations. So inflation is the rate of change of CPI, which is the consumer basket, right or wrong, whatever, that's what it is. And then there's something called inflation expectations, and you can calculate those based on bond prices, or you can do survey stuff. But what I thought was really interesting, which they reiterated twice, I think, in that, very short note, it was a shorter press statement than normal, is that the longer high inflation persists, the greater the risk that elevated inflation becomes entrenched. And then the other thing is the governing council remains concerned about persistence, of underlying inflation pressures. So it's funny that they paused, and I had to eat a Twinkie, sadly, but it is quite interesting that I think that I don't think they're done. Maybe they're done. Maybe they're not done. But I think that they're worried about inflation expectations, and they're worried that this is an entrenched issue going forward. So
do you think they pause, or are they?
I don't want to eat another Twinkie.
I don't know what the answer. I don't know. I mean, I have my own thought which way it's going to go.
I don't want to eat another Twinkie, so I'm going to refrain from making any statements.
Keith, what are your thoughts?
Well, let's go. Nothing is definitive. Like, was it a hawkish hold? Is what some people are calling it.
That's what I would call it.
Okay, so it likely won't be a hawkish hold then, if that's what Rich is calling it. What would you call it, Steve? You need a snappy phrase for it.
A panic hold.
Panic hold. I like that.
But I think what listeners should realize, the reason they didn't raise rates for this meeting, so that was, it was the result. We need to explain that literally the day after we recorded last week, or 3 days before, that there was some economic data that came out of Canada. And you want to run through that, Steve? I know you had the data from earlier, just to share with everyone.
Yeah, so it was a second quarter GDP here in Canada. So the consensus estimate amongst economists was 1.2% annualized growth in the second quarter. The Bank of Canada's own forecast was for 1.5% growth, and we ended up with negative 0.2. So the Bank of Canada missed the estimate by about 1.7%, which is, again, I would argue is not a small miss. In the economics world. So
And so they may result from that. All of a sudden, they're sitting there because they're wondering, hey, are we again? The way you stop inflation or prices going up is by either increasing supply of everything, which the Bank of Canada has. They can't do that, of course, but then they can control the demand side. And the way you reduce demand on something, you need a recession, job losses, and all that stuff. So all of a sudden, they got this data point that finally came in to say, well, after going from 0 to 500 basis points, maybe growth is starting to slow. And some people are saying, hey, maybe the recession has started. And that was sort of the pretext. That's why they did the hawkish hold. By the way, what that means by when they say a hawkish hold, it means the hold part means they didn't do anything with rates. They held stand, they stood pat. The hawkish side, it means that they said, hey, we're not going to raise rates, but we might raise them in the future. So, they're trying to, play at both sides. So my thoughts on this, do you want to talk about the recession or not? Or
well, Rich, I'm kind of curious your thoughts. I mean, as a guy that's, spent a good portion of your life analyzing economic data, to have a 1.7% miss for the quarter, not like a month, but for the quarter, how much weight do you put into that? Like, that seems like a pretty large miss.
I think it's the miss itself is quite dramatic. I think it's a little unfair for Canada because there are just fewer or less. I can never remember which one. Fewer people basically doing expectations and analysis on those data points. So I would imagine you wouldn't get that kind of miss for an economy that was like, for example, the US or Japan, where there's way more analysts looking at it. But so the miss is significant. I think it's part of a larger trend, which we've been discussing for a long time. You'll note that the Twitter zeitgeist is now all over the GDP per capita thing. Again, related to the population growth, but also related to lack of productivity in Canada, which is becoming a really important point, something Robert Asselin mentioned, and we reiterated many, many times. So I think it's the fact that GDP, there is a malaise in Canada that is, I think, growing. I think it's becoming more apparent. The FT, which is the Financial Times out of the UK, basically the most important financial market newspaper in the world, maybe, basically had a whole spread on how basically Canada is squandering its economic opportunity, being the third largest oil reserves of the world, the fourth largest oil producer, water. We have smart people here. We have good schools, on and on and on. So I think that's expresses that. Just on the release itself, before I pass it on, I thought that it was funny that the two sectors that did really well were real estate and renting and leasing. You'll be happy to know. And the public sector, which is also really funny. And you'll say, Rich,
that doesn't square. That just we can get into that, but that doesn't really square for me. Anecdotally, and
I know. I don't want to overemphasize just one data point, but I just think it's kind of ironic and funny that the two were public sector and real estate, rental, and leasing, and you can look this up for yourself. All the industries are split up into agriculture, mining, construction, blah blah blah. I think there's like 12 or 13 of them, and the two ones that contributed the most to GDP, one was public sector, and yours, Steve. There you go, from all these people coming into the city. So
there's always a bull market in real estate.
That's right. Those are two,
and there's a bull market in government jobs. That's right. And of course, this is like ass slapping funny, right?
Because, I'm just teasing, obviously,
because of everything.
It is true.
However, it's also extremely important to appreciate, because if the economy is weak, the only thing that's strong is effectively one market that's been driven by a number of factors, which is the real estate world. And then the other one is government spending and jobs. That tells me as an investor, when does, it happen? By the way, maybe a suggestion to fix all the bad data and stuff. You take the extra million who've come in and turn them all into statisticians and stuff like that, Rich.
I'd settle for construction workers or doctors, maybe. Or
well, last week we should hire more, data people. However, let's go back to the important point here. Is Canada in a recession now or not? This is going to have a big
Yeah.
a big impact coming up. Even though the numbers might suggest that, we are getting closer, to that point. That ain't a recession. What we just experienced, that's nothing. That's a blip. This can be revised away by next month. I mean, it's not a big deal. Maybe when the new numbers come out, it'll be closer to what what the Bank of Canada was expecting, and the private sector, and so forth. So again, if we get a recession, we're going to feel it. You're really going to see it, and we haven't had that yet. So I want to talk about two roads that we may take coming up with the inflation story and the economy and stuff. One is that, hey, it's not a bad thing what happens. So the one that's not a bad thing is that if we do get a hard recession, so it's not this like subtle, like minus 0.2 or something. Say the economy grows, -1 to -2.5, like, which would, rip the soul out of, a lot of people that rely on the economy to live. And if that happens, I say it's not a bad thing. And I'm not being mean about it, but that's the way a normal economic cycle should work. You get growth, and then you slow down. You have a recession, which will clean up all the excesses, and then you start again. If that happens, deflation or disinflation, right? That's the better word, maybe, Rich. That comes in, prices come under control. It's not a bad thing. I think it would just slap the Canadian dollar around significantly. And it's not going to be a good financial outcome. But that's the one that I expect we're headed towards. And it hasn't happened yet. The other outcome, this is where you can get your tinfoil hat back for me, Rich. And it has nothing to do with what we talked about yet, but I will introduce the concept, and we'll see how this starts to play out. Guess what season has just started up again?
Foosball. Ice hockey?
No and no.
Football.
Well, yes and yes. Yes and yes,
Football.
But not what I'm referring to. COVID season has now started up again.
Here we go.
So here you go. It's important though, because I'm starting to see the policy response already down in the US. There are certain states and schools are starting to mask up again. The White House is starting to put masks on. And I think right now in Ottawa, the current policy from a health perspective will be the same as before. And if we go the same as before, which is, it does involve shutdowns and, staying home for 5 days if you're sick and all this stuff, that's going to put us right back into a similar situation we had in 2020. It may not be as severe, but it's a different environment in that, once again, because the way Ottawa is structured right now. So the Liberals and NDPs, the coalition, basically, they are declining in polls. That's what's happening. So one way you offset that is to spend money. So I can see even more money being spent by Ottawa to help people out by staying home and all that stuff. Again, we're not there yet, but if that situation happens, we're going to have inflation coming roaring back again, not just in Canada, but for the Americans in Europe and elsewhere. So let's we got to hope they're not that
dumb. Obviously, we've got to hope.
Well, I would imagine. I would hope that they would. The whole world's looking back at what the policy response was at that time, and they would conclude that, hey, some things were good, but a lot of it was probably not right. So again, my fear is that they use the exact same playbook again. And because of the way things are moving politically in Canada, I could absolutely see Ottawa doing the same again to dish out even more money, stay at home and everything. Again, the probability of this happening right now, I'm just going to pick a number there, but I say it's probably 10%, but it's no longer zero. We're starting to go down that path.
Yeah, no, I think that's fair. I think just to kind of circle back on your point on possible outcomes, recession in Canada, I will say this. I'm becoming, and I talked about it a little bit at the live event in Vancouver, but I'm becoming increasingly concerned around the housing market. And I think there's a whole host of possibilities. So like, keep in mind, this is not, set in stone, but I really think like the higher the interest rates are for longer, the more challenges that we're going to have. And this is a lot of it based on just conversations that I'm having with people. A lot of the times I get random people calling, emailing, asking for advice. Here's my situation. And so you get a whole flurry of sort of anecdotes that come in. And one of the ones that I continue to sort of watch is people that are coming up that they're either on variable rate mortgages or their mortgage is coming up for renewal. And for most people, for a lot of people, this is a tripling in your mortgage rate. It's not a doubling. For most people, it's a tripling. And yes, it's from a very low base, but a tripling is a tripling, right? So it's irrelevant. And so, I had a conversation last week with a person that calls me out of the blue and says, hey, this is my situation. I've got this rental property in Vancouver. It's on variable rate mortgage, bought it 4 or 5 years ago. Variable rate mortgage is going up, can't raise the rent. So now losing $1,500 a month in negative cash flow, $1,500 a month. So say, no, hey, maybe the tenant will move out and then I can get higher rent, and market rent would mean I probably about $1,000 in the red, which is okay, well, it's still really, really bad. So I price it out and say, okay, well, this is, I can sell you for this price. And so net of all the fees and everything, you're going to break even. So I can get you out. No loss. I can get you out. Oh, well, I bought it 4 years ago. Everybody in Vancouver makes money off real estate. A break even, that's not very good after 4 years. So I'll just hold it and wait for the market to go up. Let's circle back in a year or two. And I'm like, oh gosh, a year or two. I mean, if anything, I'd argue that there's likely a stronger case to be made for lower prices 12 months from now than higher prices. But again, some people can't necessarily be convinced. They've made up their own mind. So I think that's one scenario, right, where someone's willing to lose $1,000, $1,500 a month. And how long can you do that? And I think what you see is people kind of hold out, hope for a better future 6 months, 8 months, 12 months from now. And eventually they just go, you know what, I can't take this anymore. And they sort of, ultimately a lot of times I think people sell in the lows. And so I'm hearing a lot more of those conversations. I just had a chatting with a colleague and he's saying, he had a call with one of his clients. Renewals coming early October. Payments going from $2,800 per month to $5,150. $2,800 to $5,150. So we got to sell. And so I just think there's a potential catalyst here where over the last 12 months, we've been sort of bailed out by incredibly low listings, low inventory, people sort of pushing it out, hoping rates are going to come down. And they haven't come down. In fact, they've actually gone up, and the rates have been a lot stickier than I think everyone was hoping or wanting to believe. And so I do think that we're going to see a lot more distressed sales over the next, 6 to 12 months, I think, as people sort of slowly come to the realize, there was an article today, CBC News, person's talking about a home that they bought in Greater Vancouver. Their payment is going from, so they bought 2 years ago when interest rates were rock bottoms on a variable rate mortgage. They bought a suburban house in Greater Vancouver. Their monthly payment is going from $2,700 a month to $6,300.
Ouch.
It's just
they're done.
They're done.
No one
but if you read the article, they say, well, we're just going to start cutting everywhere else, and if we have to sell the house, we'll do that, but that's the last resort, right? And so that's what I'm saying. It's this person's probably going to get through another 6, 12, 10 months, whatever it is. But at some point, it's just where are you coming up with an extra $3,000 of disposable after-tax income? It's just not sustainable.
So Steve, so I agree with you. I think this is something we've been discussing. I think we were a little bit early to that. I think if we're fair to ourselves, so we may have gotten that wrong a little bit, but the pushback that I've received from my colleagues and people who obviously everyone loves to discuss housing is that, they always say, oh, well, there's 20 people waiting there to just gobble up any kind of single family home. There's just not enough inventory, And that was I keep getting this pushback from people, sensible people who are paying attention. They're not obviously not as knowledgeable as you are, maybe, but that's what they, I've got, 4 or 5 people who they're just desperate to move into a different house or bigger house and blah, blah, blah. And so so how do you address that concern or that counter argument?
I mean, I definitely think structurally there is a supply issue, like a shortage, so to speak, but I definitely think like that can be overcome over a short period, right? Doesn't mean you can't go through 18 months
right
of oversupply. Where, because I think like what happens is you see like there's a lot of demand out there. A lot of it's on the sidelines, but when people start seeing prices drop, like people are
it reinforces itself. Yeah.
Yeah. It's
so
like
Steve, what happens with someone in this situation? They sell, they decide, they can't take the pain anymore. Are they going to start renting, or they move down market and buy something else? I'm just wondering how the supply is affected in this situation.
Yeah, I suppose that's the question, right? I mean, are they going to enter the rental market, or are they going to, downsize? I don't know. I mean, obviously, as an investor, right? You're selling an investor unit. You're just going to take the cash and put it in your bank, I suppose. So they're not like acquiring a new unit. So I actually think there's more pressure probably on the investor side, because if you think about it, it's like discretionary. It's a discretionary investment, right? It's like you don't have to own it. You don't have to live in it. If you're losing $1,500 a month, I think you should just sell personally. Especially like a lot of these units, right? I mean, the person on CBC News there that bought 2 years ago, and that's in the suburbs. I bet you if they sold today, they would profit a tax-free gain as their primary residence. So, but maybe, like I said, maybe they just hold out and spend an extra $3,000 a month servicing. But I'm getting more and more of these anecdotal stories. Friends texting me, friends of friends. Hey, my buddy has this situation. I think this is part of the reason, like, when you run, a national finance economics podcast, you get a lot of people that reach out with anecdotes and just conversations in the industry. And I think we're seeing and hearing more and more of this, that like there's a shock that, most Canadians don't know who Tiff Macklem is. Most Canadians aren't necessarily paying attention to the daily movements in the bond market, and don't realize that, when they locked in a mortgage rate at 2.4%, 4 years ago, that they're now going to be renewing at 6.2, that, they're in trouble. I just don't think most people are paying attention to that, right? Like Keith, I think most people are paying attention to the 49ers football season coming up, and that's what's important, is Sunday football. It's not
here
it's not macroeconomics.
There's nothing wrong with that, by the way, just to be clear. By the way, I have San Francisco 34, Pittsburgh 13 for Sunday. I know there's a few fans on the
we're going to be getting
podcast.
the daily the weekly updates on the San Fran picks from Keith every week, so that's what you can
yeah it's I think it'll be a good season. But back to, I mean, everything, like this conversation, like, remember, everything is tied together. It's all tied together. So you have one group of people who want the housing market to stay elevated and to never come down, but they want the financing cost to come down with it. And then you have another bunch of people, they're hoping and praying that, hey, there is, housing does come down in value, so then they can get in, for the first time. So, someone's not going to be happy. And if you're looking, I mean, the only thing right now that really, that looks, quite positive, of course, for the housing market in Canada is the supply story. And again, you can't turn a tap to change supply. That takes a long time for that to get fixed. And then the other side is the demand story, and I think that's really the one we're looking at here. And again, it's, if the Bank of Canada gets their wish, because what they've been trying to orchestrate here is a hard landing, even though they say we'll get a soft landing and everything. I think that probability is there. So people who are they've been patient looking to buy, then maybe they'll get their wish, but the other side won't get theirs. And that's the way Sue sees it. Remember that one?
God. Can I just add some numbers to corroborate Steve's anecdotes? Because I think some people, anecdotes I think are important. But so the one that I think just really stands out for me We've talked about debt to GDP ratios in Canada, which are one of the highest, if not the highest in the OECD, behind Switzerland and Sweden, I believe. So in the 100% of GDP. But the thing that really, I think, is what you're referring to, Steve, is debt servicing and the debt service ratio. And there's different ways to calculate it, of course, but the one that I like to look at and the one that you can find on the StatsCan website is household debt service ratio. So debt servicing or obligations relative to disposable income. And so for Canada, the series goes back to 1990 and it peaked in 2007 at 15%. And then it peaked again in 2019. Remember when interest rates were very, very low, were relatively low. And
I think
now
you
we're
had
about,
mortgage rates getting close to about 3.5, 3.6 kind of thing.
So,
yeah.
And so now we're about to break right through that. And so it's quarterly data. So the data is going to come out in a couple of months or whatever. We'll be happy to share with you. So we're basically going to break that 15 number. And on my view, we're gonna keep ratcheting higher and higher. Just to give you an idea, the U.S. by comparison is basically at a 20-year low. And then what the key bit and the bit that we're constantly talking about, which is variable rate mortgages or short-term mortgages or resets, etc., is you break out the debt service ratio into sort of consumer and credit card debt and mortgage debt, but you can also break it down further into like an interest component, and that interest component is about to basically, if I can do the math quickly, is about to be a 25-year high. So it's 9%. In my view, we're gonna break 10, because not only are the rates moves very, very high, but the debt burden is also high. So anyway, there you go. So there's some numbers for your anecdotes.
Yeah, those are probably the best numbers for people to appreciate. In that, because we've hit this slippery slope on the debt side, and households are, as Steve just explained, they're starting to experience it firsthand. That when rates go up, you need more money to allocate, just to pay the interest burden on your loans. And the same thing is going to happen now on the government side with federal, provincial, state, and stuff like that. Companies are always much better at managing their debt than households and governments. But yet, it's one thing if rates go up, then you need more money to allocate. If the economy slows at the exact same time, which is, again, that's where I think we're going, it's going to create some kind of an uncomfortable moment, which is called a crisis, of course, in the in the debt world. So anything that touches that, it has the probability, of experiencing some severe stress, which is not to be worried about in the investment perspective, because other markets, will absorb that capital, that's running away. But you've hit the point right on the head, Rich, with that. We haven't seen this for 40 years. No one has seen it. So no one is prepared for it.
Can I just jump in just to add one more thing? Sorry, before we go on, which is, and the reason the Bank of Canada is particularly screwed is because let's say, that we do get into a recession and the Bank of Canada goes, oh, okay, demand is, and then it starts to lower interest rates. Well, because our fiscal position is poor and our productivity is poor, the currency will feel the brunt of that, which will put excess pressure on inflation. And so, which will also hurt the economy in a different way than what we've experienced. And so it is connected. And yes, I understand it is circular, but that's the jam they're in. And the jam is they can't lower interest rates because of the other issues that are impinging on currency or fiscal stuff or productivity and stuff. And that's why I think they're going to keep interest rates higher for longer. And we are going to feel this pain. And I don't think, famous last words, I don't think we'll get bailed out the way we have in previous cycles, where when things go badly, they just cut interest rates and everybody piles back into their favorite assets. I think, forgive me for this, I think this time is a bit different.
Heath, I'm kind of curious.
What's the favorite rebuttal on that? Yeah, I do. What's the favorite market though? Is it housing or...
Yeah, of course. Yeah, of course. What else is there?
Yeah, I know. Yeah. Rich is somewhat right. My view is a little bit different in that I think if I know that once Canada does go into recession, because again, that's just the way the cycle works. I think the rest of the world is going to be going into recession at the exact same time. So maybe there's, one
Fair.
or two
That's fair.
quarters may be different. So I think the opportunity is there for all central banks. Again, they're all in sync. So they all raise rates at the same time. I can see them all cutting rates again at the same time. I think the only way Canada has this isolated story is if there's, for example, a crisis in the energy sector, and it's boom and bust. So that happens every 5 years, basically. Or we do get this sort of housing correction, which hits the broad economy. But if that happens, it means it's also happening in Australia and the UK. And
It is happening there.
Yeah. So I don't think Canada is going to have this isolated moment of risk.
Yeah,
I
that's
think
fair.
the moment of risk will be coordinated with everyone else. And if that's happening, it causes the US dollar just to fly. It's going to go off the charts. So that's the kind of stuff that we're looking at.
What else are you looking at in terms?
I was going to say fly, Eagles fly. We're staying with the NFL.
You're a 49ers fan.
Yeah, of course I am. But every team has like cool stuff, they could do, But well, except for the Patriots. But it is a fun analogy.
Anyways, Steve,
What are you thinking there, Steve?
Well, just in terms of, we've kind of highlighted a lot of the macro risks for Canada, the concerns around housing, high levels of indebtedness. What else are we looking at in the macro world? What's kind of caught your eye in the last little while? I know we've been kind of watching oil. We've been watching oil and energy here.
You go ahead, Keith.
Okay. So that's I think the story continues. I mean, we brought it up a few weeks ago. We talked about China, of course, and Japan. Those stories have not gotten any better. So that hasn't changed. I think the one that's really starting to accelerate now as well is it is how weak the European economy is, specifically in Germany. So for Germany to be weak, I mean that again, you have to be able to see the world from a global perspective. That reconciles with China being weak, right? Because China is, they like the Mercedes and stuff like that. Well, what else do they make in Germany?
Their supply chains are linked together. Anyway,
I didn't know that. No, I'm just joking. But you see what I mean? Like that's happening. I think the energy story, it's moving along the way that we thought it would. So I mean, so we're making money there, but there hasn't been this big change, since we've been bringing this up over the last few weeks. If anything, we just continue to sort of slope and roll over. Does that make sense? Slope and roll over.
Slope and rolling over.
Trending lower. Is trending lower. What do you think?
I was going to say the positive things that I see are the U.S. consumer. Yes, there's some cracks there. We've talked about delinquency rates for the auto sector and delinquency rates for the credit cards, which have started to really ratchet higher and higher. But because of some similar supply dynamics in the housing sector, people basically stuck in their homes, house prices have started to creep back higher. Got the wealth effect from like a relatively strong stock market. The ISM services, which came out last week, we've talked about, my favorite, or this week or last week, shit, I forgot. Anyway, so it came out basically, and it showed an improvement in the willingness to employ people. Sorry, it was yesterday, excuse me. So ISM services, which is, the US is 75% roughly services and 25% manufacturing, more or less. And so that's shown sort of an improvement, and that was on the employment side and the prices side and the new order side. So yeah, I'd say on the positives.
By the way, that number, consumer makes up 70% of the economy.
I mean,
it's not quite right, because what's wrong with it? And again, this is like splitting the hairs that have already been split.
I love it. I love minutia. Go for it.
They've been, someone backed up over them a few times. But that includes healthcare spending.
Right.
So all the money that goes into healthcare, it's not really consumer spending, so to speak. Right. Consumer spending is, like buying a bag of chips and going to Old Navy, the kind of stuff that I do. But it's just an aside. It doesn't
Oh, I thought you were going to be
anything?
even more. I thought you were going to be even more pedantic than that, because you could like, what is a service like, and what's manufacturing? Like, is making a pizza manufacturing, or is it services, and why not? My old boss, Luca Paolini, shout out to him. He and I had a full argument as to what defines services and manufacturing. You're right, Keith. There's a load. It's it blurred. The lines get blurred, but.
I think making a pizza is an art, by the way. It's not a process
Well,
at
I think
all.
it's manufacturing.
Boo.
Anyway, there you go.
Big pizza guy, but there are some differences in the Canada-U.S. housing market. Rich, obviously on the supply side, which we talked about in this episode, is I don't think you have to worry about cash flow negative investors per se as much in the U.S. or
cycle, no.
Yeah, exactly. Households saying, "Oh my gosh, my mortgage rate's tripling," and on renewal. Like again, if you're locking in for 30 years, I mean, there's certainly incentive just to sort of stay put. What's interesting to see is like in Canada, right, we've got surging rents. I mean, obviously population growth, which we've been apparently undercounting by millions of people. So you've got this massive rent growth that's happening in Canada. But if you look at the U.S., and this is potentially going to play into the inflation story in the near future, year over year effective asking rents in the U.S. inched up on a year over year basis just 0.28% in August, and they could turn negative by September. So you could see asking rents, annualized rent growth in the United States for apartments turn negative as soon as September, which is kind of different than what's happening here in Canada. So perhaps that sort of starts to change a bit of the inflation stuff. But you're contending that with rising, gas prices. So it's a complicated picture, right? I mean,
well, you don't give up on that point, because the Brent, which is one of the, I mean, there's different ways to calculate oil prices, and oil is delivered in different quantities and thicknesses and sulfur contents and whatever. But Brent is one of the most important one. The other being WTI, West Texas Intermediate, and there's the Canadian Special Select, anyways, whatever. But Brent basically just hit $90. I'm not sure if we're there right now. So that inflation thing, Steve, based purely on energy, is going to be really interesting going over the next few months. So yeah, let's keep that to mind as we go, towards the end of the year.
So by the way, Brent is that's the European measure.
Sorry.
Yeah. So no one worries about that. It is the WTI, the West Texas Intermediary.
That's wrong. First of all, everyone cares about Brent. Anyways, they care about both of them. It's
WCS, Western Canadian Select, is the Canadian version.
But ours is the Canadian Select trades at a massive discount to where it should be, because we don't have pipelines and we can't get the oil to where it needs to be, which is the refineries in the United States. And that's because Canada has a high sulfur content, and you need a high sulfur content to mix with the light sweet crude out of America in order to produce all the wonderful products and fuel oils that we use every day. Anyway, sorry, I'll bite my tongue now.
Right. As a segue into Europe, the ECB has their meeting. Okay. Next week, Thursday, and the Yanks are out. I think it's September 20th for the Americans, so a couple of weeks from now. So right now, the expectation is that the Europeans are done. They're done raising rates. So that will be a live meeting next week. If they do raise rates, it will not be expected, and euro will just fly on the news if that happens. So I suspect next week for Europe, the ECB, it'll be like the Canadians. It'll be, what do we call it, Steve? What was it?
Economic.
The hawkish hold, right?
Panic pause.
The panic pause. I like that one better.
Yeah,
actually, the panic pause. I like that one. I think they have the button there, the panic.
But what about the political pause?
I mean, I think if you're the BOC, you got to hit the panic pause. Seeing GDP contract like that, way off your estimates. But
I'm surprised they haven't quit. Honestly, it's hopeless. But again, let's stick with the Europeans, because that is the big market mover next week. I mean, Canada's done. So actually, Canada, we have employment data. Is it tomorrow, Rich?
Oh, you got me. Hold on.
The random number generator tomorrow?
The random number generator. Anywhere from -400 to +400.
Yeah, tomorrow we got building permits and IV PMIs. I don't see the employment numbers from Canada come out tomorrow. Maybe I got it wrong.
Hey, how much
Anyways.
stock do you guys put into this Central Bank of Poland surprising cutting rate 75 bips?
Sorry, guys, it's the 8th. Rich, September the 8th, net change in employment. So we will see that. So tomorrow, as Steve meant, we're recording today, Thursday. So tomorrow, Friday, you'll get the employment number coming out.
This is for Canada, yeah?
Yeah, for the Canadians. So we will have that tomorrow.
How much stock do we put into that? Especially we've been undercounting our population by 1 million people.
This will move the currency big time. It always
I know
will,
it does,
right?
but it's almost kind of ridiculous that it does.
Yeah, because you can get the thing like people should probably realize and appreciate is that, like for example, for tomorrow, the Canadian jobs number, the net change is 17,500 jobs created. And so just say the number, whatever it comes out to, say it comes out as 30. It's like, holy smokes, that was a huge beat. But if you want to be a proper analyst, you got to look back and say, what did they revise here? So if they revise the previous month downward, it means that the current month data, will be a lot stronger than was expected. So I'm just saying, don't get dissuaded with the data point when it comes out. You immediately have to check what happened to the previous month. What did they revise here? So I know for the Americans, I think they always post the 2-month average number, which accounts for the revision, which I think is the proper thing to do, but not for the random number generator.
We need more analysts, right, Rich?
Yes,
we need
do.
More.
But Steve, you were talking about Poland and cutting rates. They're not it's funny how the emerging markets have sort of led this rate hike cycle, and now they're leading the rate cutting cycle. So when all the central bankers in the developed world were still talking about this transitory BS, Latin American central banks were the first really to raise rates, followed by the Asian ex-Japan, because Japan never raises anything, and then now it's interesting to see Chile was the first to cut, then followed by Brazil, I think 8 days later. Mexico hasn't cut, but they'll probably be coming on soon. And so it's interesting to see Poland doing it too. And I don't know, it's funny how there's a sort of a shift in leadership. Again, the most important central bank is the Fed. I get it, but it is interesting to see that Poland's cutting and all these sort of emerging markets are doing that.
I think the other, like in line with the emerging market story, if anyone's watching a CNY, so that's the Chinese currency, it's inching its way up there. And of course, in the investment world, we always make things complicated. Going up is actually going down, if you want to think of it that way. But the yuan is now at almost 733. So the Chinese have been letting it deteriorate slowly. So you could see a situation where the Chinese and the Japanese come out in tandem, to protect their currency, like one of these big bangs. And it would, like in my mind, if that happens, I would use that as an opportunity then to go short again on it. So it's just a temporary, sort of bark or bite they would use. But watch this magic line in the sand for CNY. Like at the 733 number, it's pretty important, and a lot of people are watching that. Because remember, if that panda in the room. By the way, Steve, like I love that GIF that you. GIF or GIF? What would you call it? A GIF? I don't know the cool words. GIF? Okay.
GIF?
It's a GIF.
Cliff? Tiff.
Rap?
It's a tiff. We should call it.
Did someone say rap? I woke up. I got out of bed.
Oh, no.
No, that panda is hilarious, by the way.
But yeah, he goes in, he just cleans house. But if that would happen, Canadians that don't like inflation, they'll be happy with it. They won't be happy with losing their job, but at least the things won't be as expensive anymore.
At least you can renew your mortgage at a lower rate.
It's not a one-way street, guys, or even a two-way street. It was funny because when I think you guys know I was traveling last week, and we're driving on this 401 highway, and when I was a kid growing up, this 401 was legendary. You start hearing the story. It's like 4 lanes, And where I grew up, we had one lane. That was it. Like there was no line in the middle of the road either. Every car just drove on it. And then all of a sudden, it grew to 6 lanes and 8. It was unbelievable. So we come back from this trip, and I say to Mrs. Icecap's mother, so my mother-in-law, I said, we were on the 401. And immediately she turned to me and she said, how many lanes were there? I said, there was 8 lanes going in one direction.
That's a good story.
And she said, well, what did you do? I said, you just stay in the middle one and hope for the best. I said, they're going all around you. And I don't know why I talked about the 401.
That's a good story, though.
I think
it was better than the rap.
I think we were talking about the dilemma, which is basically people get to pick between job losses or higher interest rates. You pick. I think we call it the old shit sandwich.
Now remember, it's not a one-way street or two-way.
Right.
It's multiple ways you can go, I think. Yeah.
Well,
is this the worst 100th episode ever?
No, I thought it was a good one, actually.
I think it's good. I think it is good.
It's our best 100.
We've got Ben Rabideau of North Cove Advisors, big on Twitter there. He's going to come on next week to chat about Canadian credit cycle, business insolvencies, housing. That's his wheelhouse. I think he's got some of the best research in Canada. So looking forward to having him on next week. It's going to be a really, really great show. So tune in to that. But as always, we appreciate your guys' support, and we'll see you next week.